Okay, I believe that is enough time to allow everyone to get themselves in here, so we can get started. So, let's get on over to the right screen. Perfect. Right, so I am going to be starting off here pretty much on, well, I guess the Great British Pound US dollar, as that is what is right in my face. So, the first thing I always like to do when it comes to a market, and something I believe is extremely important, whether you have already done your top-down analysis for the week or however often you have prescribed yourself to do it, that doesn't mean we should never use the higher time frames just because we've already done our top-down. I think it's actually very important that every time we sit down to analyze or trade a market, that we remind ourselves what our bias is. So if I could also just ask anyone in the chat as of right now just to let me know if the audio levels are good, if the background music is loud, not loud enough, you know, the ratio of the background music to my mic volume, if you just let me know how that is. But anyway, yeah, so reminding ourselves of the higher time frame bias, crucial. So let's go back even to the 3 month and pretty much just remind ourselves what's going on here. So obviously we can see that this market is pretty clearly, pretty obviously bearish. You know, we have a swing high down to a swing low, swing high, swing low, swing high, swing low. Clear bearish structure. The highs are being held and not being penetrated, whereas the lows are constantly being liquidated. That is obvious signs of bearish structure. The recent liquidation of this level, if that line was actually straight, that would help, obviously suggests that bearishness is to continue because we have liquidated the previous low. So therefore, that is why we were looking inside of here as the 3 month impulse. And obviously, if we're delivered with a correctional wave in the long term, we can expect that we are going to trade up. We have a point of interest identified higher in the market that may need mitigating. Obviously, the reason we like this is because it's a clear buy to sell region and a lot of inefficiency in that point. Okay, it's all good. Thank you very much. Can you tell me Great British Pound USD? So, yes, that is the one I'm going through as of right now. We're going through Great British Pound US dollar, just starting here on the higher time frames, and we will slowly work our way down. So, yeah. If we start seeing breaks to the upside, which would obviously be a significance of the fact that a correctional wave is forming, you know, once we see price starting to make these moves higher, we know, okay, a correctional wave is inbound. In order for bearishness to continue, we need this high to be held. And therefore, where would this correctional wave likely end? In my eyes, in terms of this 3 month structure, this is the most valid point of interest. But we are still pretty far away from that happening. Obviously, looking inside of this as an impulsive wave, we have to understand that every single impulsive wave in the market on a lower time frame is going to represent an entire trend. So whereas yes, this is a single move from A to B, therefore representing a single impulse, we have a downtrend within that. Whereas we have impulse correction, impulse correction, impulse correction, impulse correction, impulse, and that is representing our downtrend within the 3 month impulse, which I have labeled as a 1 week impulse using this box here. Now, the reason why this is relevant is because once we see this 1 week structure broken, so we can even put a level or a line right at that point, if we see the break of this line, that is when we know the 3 month correctional wave is being created. But as of right now, that has not happened, so we can assume that we are still working within the downtrend that created this 3 month impulse. Therefore, if we go down to the 1 week time frame now and we look inside of here, you see that is our 1 week structure. We can actually make the assumption that price may want to trade up, mitigate one of these 1 week supply zones, in which case when we've come down to this 1 week time frame, we can see these clear buy to sell regions, which are acting as unmitigated orders. And therefore we know that when price trades up into these regions, and the institutions are able to close these positions, these buy positions, we know that that is actively going to have an effect on the supply and demand balance. Now, obviously, if that has enough of an effect on the supply and demand balance, it may then cause the reversal in the market, in which case we would continue this 1 week structure. So, as of right now, our bias is the fact that we've got this break upwards, and if you remember what we were saying with the 3-month impulse, we can say the same with this 1 week impulse, where in order for price to trade from A to B, we're not just going to have a single straight line trading us from A to B. We obviously have to have an entire downtrend in order for that to happen. So, if we were to follow the structure in here, we can identify this move, this smaller box, as the most recent impulse of this downtrend that makes up the 1 week structure, which I know sounds confusing, but this is something we have to get our heads around to understand market structure in full. So what's happened here is this is our 1 day most recent impulse. So now that we've had a break of structure of this level, we know that price is no longer continuing this downtrend or continuing this 1 day downtrend. Instead, we are delivering a correctional wave within 1 week structure. And in order for 1 week structure to hold, we know that the high must be protected. Therefore, where is price most likely to react from? Well, that is going to be one of the 2 points of interest we have identified here as supply zones. So we would have alerts set at both of these with the expectation that we want to see price eventually trade up, hoping to see the mitigation of one of these orders, then having the reversal power to cause the move lower. So again, we're just reminding ourselves of that higher time frame bias. So in order for price to trade up to here, we therefore then understand that price needs to remain bullish to trade up to that. So now let's go to a lower time frame and view most recent bullishness. So we can see here clear bullish structure. So we have impulse, correction, and then this is where it gets a little bit distorted, because we'd probably argue impulse, correction, impulse. Therefore, on this time frame, and we may even decide to go slightly lower to the 12-hour, 8-hour. Okay, this is actually a bit better to view. So now we understand that the most recent impulse within this bullishness is going to represent this right here. We can label that again. Okay, so this right now is 8-hour structure. So we can identify that as 8-hour structure. And we understand that this is representing the bullish trend that is emerging here, that has the purpose of delivering us with the 1 week correction, which has the purpose of bringing us into one of these zones. So looking inside of here, we'll now go to a lower time frame to look at these points of interest better. Now, in an unrefined form, we would be taking this entire candle, in which case we've had a recent tap. You would have noticed though, before I moved that, I had actually gone to a lower time frame, refined that, and there was not actually a full tap. That is simply a flaw within over refinement of zones, and something I was aware of when I refined it myself. Regardless, we can see that price has quite clearly traded us down now within this 8-hour impulse. We've been delivered with that correctional wave. Well, why do we know it's a correctional wave? Because if we continue that process where we say, okay, well, this is not just a single impulse. In order for price to move to A to B, we have to have a trend to take price from A to B, in which case this singular bullish impulse will also represent an entire uptrend. So obviously the structure within that, we understand that that right there should have been a protected low. This move back down breaks the low, liquidates that, therefore gives confirmation that it is a correctional wave, comes to mitigate the demand zone that we've identified. And then if we actually look inside of this, we can probably identify some form of Wyckoff in that region. If we actually zoom in on that and we try to identify that, we're pretty much just seeing the fact that we've had a level of liquidity built. Now what this is doing is, anybody who is looking at this market as a technical trader, support, resistance, trend line, so on and so forth, they're seeing that prices come down and instantly hit a level that they are believing is relevant as a point of support. Okay, so we're having reactions, we're having the break through that level, breaking the highs, therefore signifying a break of structure, therefore confirmation that buys could be valid to those technical traders. Therefore, they're very likely going to say, right, let's get involved in positions here. So they get involved in buys. Where are they putting their stop loss? Well, obviously that's going to be below the zone. So the institutions know, right, so we'll give them this fake out. We'll give them this sign that price is pushing through, breaking structure. We'll get them involved in those positions, therefore creating a concentrated area of liquidity. We'll then blow price through, activating the stop losses. We'll then manipulate them further by then signifying the break, retest, continuation, before ultimately liquidating that level that turned to resistance, breaking structure to the upside, coming back down to test that last sell to buy, which is where a very good entry could have been found, before then reversing higher and continuing on. So an entry most definitely could have been found there, which was the 7th of December, so 2 days ago, so Wednesday. And we see that prices obviously just continued trading higher from there. So what we can do now is looking inside of this. We see that as we've broken away, we've had impulse, correction, impulse. So as of right now, as we see this move lower, which is obviously fundamentally backed because we would have had some news released at 1:30 p.m. as we always usually do from the US. So that is probably why we've seen that sharp spike of volume, of volatility introduced right there. But okay, if price is going to trade down, where is it likely to trade down to? Well, I can notice already a very nice little sell to buy region hiding inside of that. Now, if we go to the lower time frames, we can probably refine that. But to be fair, as we come lower, this doesn't look as nice, given the fact that there's no clear sell to buy, and it appears that the wicks do come back down to mitigate that. So we just follow the price action in this region. Okay, well, we have a sell to buy there, but we see that price leaves that region and taps us back into it. We also have a sell to buy following these wicks, so the sell would start from there and end there. Again, these wicks come back down to already mitigate that. So then we'd argue we have a sell down from this to this, but then these wicks come back down to mitigate that. So the only region that actually remains unmitigated right now is this very small zone right there, again representing a sell to buy, which is not yet mitigated, very close to being mitigated, but not fully. And yes, we would argue, well, there's one above, but in this region, we always want to ideally go for the lowest unmitigated region, because if that correction wave is going to form, why not mitigate all positions? So I'm going to argue that this could be a zone that holds. I don't think there's anything beneath this in this structure that would likely hold. Obviously, at the time, we probably would have identified this sell to buy. We've already seen price react to that, where we would have gained a potential profitable position. We get involved in the entry somewhere in this region. We partial at the previous high, so there was definitely profits to be gained there. Regardless, if price decides it wants to come lower, let's then go inside of here and see if there's anywhere that remains unmitigated at this point that we can actually look to take positions from also. So I'm quite liking how efficient the structure is here. Everything that's being left over is being mitigated, you know, a clear sell to buy there, which we see price has come to return into. So I don't think there's anything nice below this zone that I'd like to see mitigated. Therefore, if price does fall through, it's very likely that we're going lower longer term. But getting back to what we're saying here, where we've seen obviously the deliverance of the third box. Well, why is that? It is because we were delivered with a impulsive wave, which we've identified with the first blue box. We've then been delivered with a point of interest, therefore representing this demand zone. So that's 1, 2, and then finally we get number 3 through this green box, which is representing an institutionalized control from a point of interest. Now, how do we actually get valid entry confirmation through this? Because, you know, many times price can tap a zone, even though we are delivered with signs that the institutions have controlled that. It doesn't always mean a full reversal in trend, and it doesn't always mean that price is going to hold that zone. So what we do is we repeat that process again on the lower time frames, therefore finding another set of 3 boxes. So let's replay that. Let's come back to this point and let's go down to a 3-minute or a 1-minute. We will decide as structure plays. And we know at this point we have a vast level of liquidity that has just been cleared. Now, we know that following this structure, this high should be protected if we remain bearish. Okay, so put that there, and now we can allow price to play out. Okay, so we're making these moves higher, heading towards a break of structure. Now we can see that the overall sell started from this region. Now when we're on such a low time frame, I would be quite hesitant to over refine the zones massively, and I can talk you through that if you'd like. So pretty much, if the institutions are bringing price down to a zone, we understand that in order for them to reverse from any zone in the market, any point of interest, they have to go through an absorption process, which is exactly why accumulations and distributions are formed. It's because it's a representation of the institutions absorbing some of the previously dominant supply or demand. Now, in this case, because we're in a downtrend, we therefore know that for a downtrend to occur, supply is dominant. Now, if we're hitting a demand zone and we want to reverse from that demand zone, we understand that we need to make supply no longer dominant and allow demand to then take that control, take lead, in order to cause that new uptrend to occur. So what has to happen as we enter this region, as we enter towards the region of the demand zone, we obviously then need to absorb some of that supply that is already dominant. That is why within phase A of an accumulation here, we see that volatility and volume diminishes quite vastly because of the fact that what's happening here is that institutions are executing buy positions whilst also closing any sell positions they had active to actively absorb any supply that is in the market. So we see once this volume and volatility starts to diminish, we know that it is actively being absorbed. That is why we always want to see one, liquidity built at a region of a point of interest. USD news it did indeed, yes, there was a sharp spike down, but thank you for tuning in, Ben, much appreciated. But yeah, the reason why I always say I need three things: liquidity built, high volume clearance of liquidity, and break structure. I'll walk through that. The liquidity being built is a representation of the absorption of supply or demand, in this case supply. So when we are being delivered with a level of liquidity, we know that the institutions are active because they are actively absorbing the supply and demand and manipulating it into their favor. Now, why else would they manipulate it into their favor unless they were wanting to reverse the market? So the level of liquidity being built is a representation of the absorption of supply. And then that high volume clearance is a representation of the fact that they are clearing the liquidity, manipulating everyone out that got involved in positions from this, seeing it as support turned resistance. But then by also bringing price down here, they are gaining the best possible position to execute a buy position because it is the lowest price they will get in this move. But then on top of that, when they bring price through, they can actively see how much supply is remaining in the market, because as price falls through, if it is hesitant to fall any lower, you know, right, there is literally no supply in the market. It is struggling to stay below this level. That's what's happened. We have a sharp push through. Price struggles to stay below. They start loading up on their buy positions. Price then takes off. Now, we're going to take this sell to buy as relevant, but we first need to see if a break of structure is delivered. So let's see if the break's delivered, and if we still do then return into this region afterwards. It is worth noting that after the break, we have also arguably updated the point of interest because we still have another sell to buy in this region, but we'll see how it reacts. You know, once that break of structure is delivered, all we really need to see, you can refine it more if you'd like, but the main thing we need to see is a pullback into somewhere within this region while still holding this protected low, and just seeing rejection, at which point when we see that rejection, we know we can start getting involved in a position. Okay, price is falling back down, and right there, we missed it because of how quick the candles were updating. But right there, what we've seen, maybe we can see this if we go to a lower time frame. Well, to be fair, the unrefined position, as we come to this lower time frame, is obviously going to represent this as the proper sell to buy. Regardless, getting to the point, what we have seen here is pretty much a similar process to what we had over here in terms of the fact that as we've hit this zone, we've seen the absorption of supply. Therefore, we see rejection from the zone. The second we see that rejection, And I probably would have just waited to see the rejection. The second we break out of that region, looking to get involved then in a position once we break out. Stop loss either below this level or maybe even below the zone, you know, wherever you see fit. Either way, always adding a little bit on top of that to account for spread. So maybe we just have it to here. Always partial at the structure we get involved with. That is my rule. So I'd always partial at this high first. Right there. That's going to be our partial point. And then of course we would work this within our higher time frame bias, where we have the expectation that price should eventually come to exceed this high all the way at the top, which is 221 pips away, so 24 RR. We may decide to partial at any of these relevant points as we go. That is completely up to you. But obviously we can just now go off the replay feature just to see how price played. So we were delivered with a partial, price continued playing out. We peaked at a total of 175 pips, or just shy of 20 RR. And then obviously we see moving forward that price has had this large spike of volatility from the news. Hopefully we recover and continue in the direction that we were heading anyways, in which case coming to hit that take profit. But yeah, that is how we would have tackled that, and that is the process I would use in order to find entry confirmation, and actually to try and make that more relevant within the 3-box strategy, which is something I forgot to do. Let's just remember the fact that what we were looking for is, okay, the second we have a break of structure, that is delivered us with our first box, our first bullish impulse. We then have 2 point of interest. And then if you remember on the lower time frames, we identified the fact we had rejection from that region, some form of institutional control, and therefore entry confirmation. So that is our second set of 3 boxes. Therefore, if we were to only use the first set, what we would have waited for is seen price do this in this region, see rejection from the zone, probably get involved the second the break of structure gets delivered. Of course, we'd have to have our stop loss below this low with the take profit all the way up. And this is still a valid position, don't get me wrong, but we're looking at the difference between an RR of 4.28 to 24.5. So just adding an extra set of the 3-box strategy, or, you know, compounding that position further and refining it further, the RR returns obviously become much more vast. Anyway, let me actually look at the chart now. Oh yeah, 2023 is going to be the year, Ben, most definitely. I mean, just look how far you've come in the second half of this year alone, and you have set yourself up and prepared yourself quite nicely to do good things in the new year. So very excited to see that. And nearly on 1K subs, I know it has been growing pretty quickly lately. Very happy about that. Nearly at that goal which me and Luke wanted by the end of the year. I mean, I can't remember how long ago we said that, Luke. How long ago we wanted the 1K by the end of the year, but it's becoming more and more likely. And arguably, I don't see why 5K or 10K is not possible by the end of next year, as long as we keep producing some decent content that people like. But anyway, back to the stream and the analysis. Yeah, that's pretty much all we can do as of right now in the market. You know, we've had a pretty major zone tap in this region, which is quite relevant. We've had the reversal and continuation higher. We see that also within this region, you know, let's say we missed what happened here, as this did happen 9:30. If you are not actively trading the market at those hours, maybe you missed that. So what we would have done is, let me sort of just clean up the chart a little bit here, just to make this a bit easier. Let's go back to a slightly higher time frame to view this better. Okay, well, we have a fairly clear sell to buy in this region. Let me try and refine that slightly better. Okay, so on this time frame, we can quite clearly see that that comes in to mitigate it. Okay, so I think from this time frame alone, obviously the unrefined position would be this entire thing alone, which I don't think is useful, as I always do prefer to refine the positions. Unrefined, we'd probably go with one of these sell regions. Maybe this, as it's representing the fact that once we've had that sell to buy, we do have more market inefficiency afterwards. So we'd have that as a point of demand. Anyway, the point that I'm getting at is price has actually come back down. So what we would have done is after we got delivered with the break of structure, we see we've had our first bullish impulse, correction, and then that next impulse in itself. If we don't look too fractally, obviously the fractal nature would be this, but overall on this time frame, the overall impulse is going to represent this right here. Okay, we've had a pullback down into a point of interest. That is our second step. The reason why we know this is a correction and it's valid is because this low should have been protected. We broke that, therefore signifying a correction wave. And then if we went to the lower time frames, is there much confirmation to be delivered there? Well, in all fairness, at the time of its creation, what I would have been looking at is the fact that, right, well, we obviously have a clear level of liquidity being built up right here. What we need to see is the liquidation of this level and then the break of structure to the upside. If that happens, that is going to be pretty good confirmation. Boom. Let's allow that to replay. Obviously a slight liquidation of the zone, but that's fine because we've seen it come to liquidate the region. After that liquidation, instantly injected some volume and volatility. So clear signs of inducement and momentum or an institutionalized control. Okay, the second we get that break of structure, if it happens, maybe we'll speed this up a little bit. Still awaiting the break of structure. Let's go to a slightly higher time frame, just so we're not waiting around too long. Okay, boom, there we go. Break of structure delivered, and we can already see prices pulling back. But what we would have done at this point, would we have gone to a low time frame? No clear region inside of this, and when there's not a clear region, that's usually when I just take a less refined demand zone. So, okay, where does a real sell to buy begin? We could probably argue somewhere within this entire region. This is a very unrefined region, but there is no refined position we could have taken. So I just want to see price pulling into this region, see some rejection. Of course, we'd use the lower time frames here. Because of the such high volume, it's going to be quite hard to identify parameters and identify the reversal. Because, for example, like if we had clear structure trading us down and we knew that we had a clear protected high here, we know exactly when the break of structure is occurring. But because there's no real structure inside of this, it's more of a high volume move. It makes it much more hard or difficult to identify a relevant point. So we've seen rejection here, which is nice. But as I said, it's unclear where a proper break of structure has arrived from. Now, once we saw price enter this region, we can, we see clear rejection. We see that price has entered this. We're clearly rejecting. We cannot seem to surpass this level. So the second that price then comes and breaks that high, we could have taken that as an entry. I don't think I would have personally, because to me that is quite aggressive and quite preemptive. We would have, of course, partialed at the previous high. What I would have done instead is, obviously we've seen the tap into that. I would wait for something more clear. So looking now inside of this point, maybe if we go to a different time frame, we can view this better. Okay, I would take this sell to buy and see if this gets mitigated, and if so, it may provide us with a slightly better opportunity to get involved. Okay, so we've tapped in. I'm not seeing any confirmation of an entry here because of the fact that we've tapped in with high volume. There's no clear liquidity being built, but we shall see. Okay, at this point, no, there is now rejection. There is now liquidity being built. That is a good sign. Okay, we've broken to the upside. Another good sign. We could get involved instantly after the break. Stop loss just below this region. Take profit up at higher time frame structure. Probably partial either at this level, or we would look to partial at least at this level up here. Regardless, another option that we do have is if we wanted to refine this further, we could go to a 5 second, look inside of here, so we have the overall sell to buy at this point. Maybe we want to see a reaction to this first, just as confirmation that demand is definitely taking control, but there's no real confirmation of whether or not that will happen. So let's just see whether If we got involved preemptively, that would have paid off, or if we waited for the zone, would that have paid off also? Okay, so we're having a pullback. Yep, we've had reaction from that zone. If we see a bit more hesitation from that region, okay, we're not seeing much hesitation. There's no liquidity built, so on and so forth. Okay, continuing to watch this. Okay, now we've had that reaction higher. That is pretty nice confirmation. I've moved this position. Where did I originally have this placed? It was straight after, yeah, it was here, right? Straight after done that. Stop loss at the bottom. Always account for at least 1 pip. So where were we at? 5.5, 6.5. So that's the original position. If we didn't get involved from that, however, looking inside of here, I don't think I would have gotten involved if I waited, just because of the liquidation that we've seen here. I'd now want to see a break of this high before getting involved. Okay, we've seen that, so we could enter a position here, stop below here, or stop below there. Obviously take again, we've already discussed where that take profit would probably lie. But let's just see if this original position would play out. I'm not fully liking the structure here because there is a very high concentrated region of liquidity here where we've not seen a real manipulation, which means there is still a chance that price doesn't follow this and does come through to liquidate the region first. So I am aware of that and I am accounting for that. So if it happens, I won't be fully surprised. Let's go to a higher time frame now just to speed this up and see exactly what happens. Okay, so price has taken off. If we decided we wanted to partial at this point, we would have walked away with a partial already. If not, price is still running in profit. That's another partial point we're looking at with the overall take at this market high. So pretty much a 10 RR trade there. Let's see how price continues to play. Well, we are continuing upwards. And what we will do is we'll go to a higher time frame now. And to be fair, we'll even just come out of this. Remembering why we've identified this, because there is a clear sell to buy right there that acts as an unmitigated order. But like I said, let's just come out of that now. Let's look inside of this. We see that a take profit would have been hit. Given that we used this structure as our take profit, on the off chance we wanted to go with even higher time frame structure, of course, we have a 27 RR trade there. Either way, a lot of profit to be gained. Again, we peaked here at 126 pips or about 20 RR. So we walked through there 2 profitable positions we could have found. Let's now look inside of this one just to see how profitable this could have potentially been, or if an entry would have been found. So let's go back to the 1 minute time frame. We know that this is quite a clear zone. That's a clear sell to buy. Okay, well, already we can identify the fact that we are creating a level of liquidity here. So what we'd want to see, oh, that happened a bit too quickly, is exactly what has happened, the liquidation of that level, price falling through. Now we are looking at this as a protected high. We want to see the break of structure of that happen. Okay, so let's see what happens. Nice liquidation, break of structure delivered. Now we can either get involved straight after the break of structure with a stop loss just below that, take profit again at the structural points we talked about prior, or we could repeat our 3-box strategy, in which case, taking this as an impulse or wherever that impulse finishes, we will identify that very shortly. Overall sell to buy is pretty much going to act as this right here. We could potentially refine that, and I think if we refine that, I think this would be a pretty valid, oh God, what have I done? This would be a pretty valid refined zone. And as would probably this one down here. So this is the unrefined region. Those are the refined regions. Let's just quickly see where this impulse ends, and we'll know when we have clear signs of correctional wave. Okay, so that's the impulse. This is the correction. We have our points of interest. Now we want to see price tap into one of these and deliver us with some clear rejection. So we're seeing rejection already from this zone. Price is taken away quite nicely, so we could have got involved. I would say if we look at this as a structural point, the second we broke that is probably where we get involved in a position, seeing volume come out of it. Stop loss just below that point, we'd always account for a bit, maybe even put it below the zone itself. I'd probably go about there. And of course, we're expecting a move higher longer term. We're still aware of the fact that price could potentially come lower to mitigate a lower zone, and therefore we're fine with that. So if a stop loss is hit, I'm not going to be absolutely baffled by it. Then again, using structural points, we'll quickly zoom out and determine that, as that is exactly what I do. We take a partial, at least at this structure, for 8.8 RR, and then the overall take profit, of course, would be up at this zone. So partial, 8.8, let's just say 9 RR. There we go. Let's see how that would have played. I mean, we've already seen, I'm pretty sure it does hit partial before the news comes out. And this happened at 9 AM this morning. So let's see how price plays, or if a stop would have been hit. Yeah, stop was hit. That's absolutely fine. What we have done is trading down to this region. Okay, now watching this boom. There we go. Let's just remove this. So we would have hit stop there. So now following this structure, the second we had the break, let me just find exactly which high of that high right there. That alone is confirmation, because of the fact that, okay, we were aware instantly from this zone that when taking a position from this zone, we still know the fact that there is a zone lower that it could react from. Now, as price has traded down, don't get me wrong, it obviously hasn't reacted exactly from this zone, but because we've now been delivered with the break to the upside, that is confirmation. So after the break, this is going to be a much less refined position. Stop loss below there. Okay. We already have our partial point there. Take profit much higher. Now let's see if this one plays out. And remembering that it is fine for us to be taking losses like this, because it may take 1, 2, 3 opportunities. We can be wrong 2 of the times. Get involved on the 3rd, because as we see, if we zoom out, in this example, it's probably not 8 RR to be fair, but the partial is delivering us with 4.26 RR. So take off 50% of the position there as 2.1 RR. So even if we had 2 stop loss hits and then that partial get taken, we're still coming out on top. So it's absolutely fine if you have to take a few positions to finally get the correct one. See, price does make those moves higher from here. Let's zoom out. Was there a stop loss hit? No, we wouldn't have a stop loss hit. We would have had the partial right at this region. We would have taken that partial close. Every time I take a first partial, I will then always move SL to entry. So we would have had the partial and then stop loss at entry hit. Obviously, this was completely fundamentally backed and delivered based on the fact that we had news released at 1:30. And I would make the assumption that if the news didn't come out, we probably would have seen the continuation higher. But yes. If we didn't find the entry there, as price took off, there would have been a few regions we would have identified as unmitigated. This being one of them, that being refined, that being the overall candle, the refined position there. We might have also identified that, but as I stated, I usually always go for the lower of the few zones. So that's what I would have looked at. Obviously, we found an entry there already. Doesn't mean we can't look for other entries, but obviously we just have to be aware if we add more to that, we are adding more risk. So you could have decided to take that one as well. We can even walk through to decide if there would have been confirmation. Okay, well, liquidity built, yeah, in this region. What is relevant is the second we have that break. We could have gotten involved straight after the break, or we might have waited for a pullback into this region, which I doubt happens, considering the volume at which we traded away. No, we never quite tapped back into this. We went off and partialed anyway, so maybe there wasn't a position to be found there. But I think that will probably conclude the sort of back testing portion of this. So we've pretty much just ran through all the possible ways we could have tackled the market since this tap on Wednesday from the overall 8-hour zone. Now bear in mind, By the time we had that zone tap, we were potentially waiting a very long time. You know, once we see this bullish impulse forming, which was the 30th of November, it wasn't until the 7th of December that we found potential entry opportunities. So it's absolutely fine if we have to wait an entire week for something to play out. Because as we see, if we've gone an entire week not trading, once that overall move does happen, we've had 1, 2, 3 entry opportunities, 3 profitable positions, all of which we know for a fact we would have got partials from. And as of right now, we are still awaiting to see if the overall take profit at this level would also be achieved. But let's actually go on to now, after we've done the back testing and seen inside of that how we could have taken positions at all of these regions, let's now discuss how we also would tackle this market moving forward. So we had this clear, obvious position identified, which we've refined. We know that this is valid. Now this spike down didn't quite come to tap it. Now what we need to wait and see is whether after this volatility we are simply going to recover, penetrate this high and continue higher, or if this volatility spike is actually going to sustain a correctional wave, at which case we want to see the mitigation of this zone. So we can set an alert at both regions, because if we break this high, we can then continue looking at this as a bullish structure. This sharp spike is simply an anomaly created by fundamental news, which is unfortunate, you know, and which is why we need to actively implement risk management around news release, because of the fact we can just see sharp spikes like that, which will come to stop us out. If we take a quick browse, we can see that at 1:30 p.m. today, we had the PPI fundamental, which is pretty relevant actually, as it is a very good indicator of inflation. The reason why we spiked down is because the news that was released, I can even drag that across, was better than expected, green, better than expected. Also worth noting that in exactly 57 minutes, we have these 2 fundamentals to be released. I would say though, these 2 are much more highly respected than the 2 released at 3 p.m. I wouldn't expect these to have as much of an effect in the markets unless the actual result is vastly different from forecast, in which case on any fundamental there's obviously going to be a reaction. But yeah, that's pretty much what we're waiting for in this market, and I've somehow managed to go about 40 minutes there just walking through this market alone, in which case I was hoping we could get through a few different markets, but we are going quite a while on this one. But we've managed to talk the ins and outs of this market, which is great. Does anybody have any questions? Sorry that I haven't been engaging as much as I should be with the chat, but if anyone does have any questions about any of this, or anybody who took any profitable positions from this market in the last 24 hours or within the last week, let me know in the comments right now in the chat. And thank you to everyone that voted on the poll. Evidently you guys are liking the stream so far, so I'm glad about that. But yeah, now it's just a waiting game on this market, and obviously we're sort of rearing off now to the end of the week, so we'd be avoiding taking any long-term positions on account of the fact that if we execute them now, it's very likely that by the time markets close, we will still be very close to entry. And then when spreads increase over the weekend, it's very likely that those spreads could actually come to take us out. So I wouldn't avoid holding over the weekend, but I would avoid holding over the weekend if we get involved very close to the market close, in which case, as we say, we know we're much more safe if, for example, we got involved in a position here. Let's just say we refine that and we were expecting to take profit all the way up here. Now, as of right now, I wouldn't say it's a bad idea to hold this across the weekend, because we have a 84 pip leeway. Price is 84 or 85 pips away from entry, therefore it's very unlikely that spreads are going to increase by 85 pips, or that we're going to have that much movement whilst the market is closed. So we're much more likely to be safe. What I would suggest though is just moving SL to entry, which we would have done already to be fair with this trade, but if not, moving SL to entry to ensure that if something crazy did happen on the weekend, we would just be covered from that. But back to the point, I would just avoid holding over the weekend if price is still very close to entry, in which case I would say, you know, major markets, if we're still only 5, 10, 15, 20 pips. So, you know, if we're still sort of within this region, I would avoid holding over the weekend, in which case I'd maybe close and look for a re-entry as markets reopen, just to be safe. Yeah, we've walked through the analysis on this, so everyone that has actually stuck around through all the waffle will actually know what we're looking for longer term, understand what the bias is, and how we're looking to tackle that. And something that is worth noting, just to top all of that off, is any positions we get involved within this region, I've been saying, right, we'll have the take profit here. There's absolutely no reason why you couldn't. Now let's go back to where we got involved in the position here, just to make this point. Okay, let's look inside of that. Okay, I think we were talking about the position inside of here being there, stop loss just below that region. Obviously account for spread, so it would be just below. Okay, so obviously in the examples I've been discussing, I've been making the assumption that we'd always place our take profit at this high. Is it going to let me grab that? Yeah, the take profit at this high to follow the structure, but there's absolutely no reason we can't allow that to follow our higher time frame bias, in which case we know in the higher time frame that we expect longer term the price is going to continue trading higher all the way up to here, some 850 pips away, in which case delivering us with an 80 RR trade. There's absolutely no reason why that can't be done. Now, the reason why I'd be slightly hesitant is obviously because of the fact that at any point price is going to be able to deliver a correctional wave, which could come back to tap this. It would still be following bullishness, but we'd be taken out of that position. So if we wanted to hold this position longer term, I would still use this as a relevant point, within which case I'd probably take another 50% off. So just a reminder of how we would have managed that. We got involved in this structure, so therefore we would have partialed at this point, at this high. So we've had 50% of the position removed there. So we have 50% remaining. When price then potentially taps and exceeds this level, a remaining 50% of the position comes off. Therefore, that's 25% of the original position. Therefore, we have 25% of that position remaining. So that if this take profit was to be hit up here, that's 80 RR, but of course 25% remaining, that's 20 RR. So we're gaining an additional 20 RR from that. So if we were to count that up completely, we were to partial there. So that's 4, let's just say 4 RR. We take off 50%, so that's 2 RR secured. 20 RR, we take off quarter, that's 5, that's 7 RR. And then of course that overall 20, so that would be 27 RR total. Risking 1%, 27%, risking 0.5%, 13.5%, which is crazy. Just something you'd probably expect every month, if that, every couple months. So getting that in one trade is very, very good. And why also doing a top down is important, because we allow ourselves to be reminded of where price should go longer term. Then we can account that into our take profit and in our trade management in order to try and profit longer term from the analysis and bias established. But I think we've gone through that market pretty well there, considering how much I absolutely waffled over this market. I'm not sure if we should go through another market, unless you guys have any requests. Anybody in here has any requests for a market that you'd like to see me analyze? If that is the case, make sure to let me know, and I will most definitely go through that market for you. Yeah, I've pretty much walked through everything there is to do with pound dollar. We've spent a good hour now walking through this market. Australian dollar, US dollar, that can most definitely be done. Sorry, the chat is just glitching out on me currently. US 100 could be at the bottom and go for a new high soon. Good time to invest. Okay, so we'll go to Australian dollar, US dollar. That's actually something I've been watching closely as well, so I'll probably end up waffling on this for a long time. The news has actually played out, wow, extremely well. So I actually sent a video of this into the VIP chat. You might have seen that, Ben. I believe you're in the VIP chat. But yeah, same thing. Let's go to the higher time frames quickly and remind ourselves of what's going on. So longer term, if we work within this, okay, we have this as the overall impulse. We've recently come back to reverse inside of a point of interest. Yet we're now heading down, expecting price to exceed this. Okay. Well, if we are then looking inside of this as an impulse, we've had the correction reversal from this region, break of structure lower. If we then work within daily structure, we see that within this downtrend that's emerging, this is the most recent impulse. We're expecting the tap into this zone and reversal from it. Okay, well, when we go low, we see that that's recently been delivered. We've had a nice institutionalized reversal here where we've had liquidity built, liquidity cleared, break of structure to the downside. Now, what I was seeing at this point is I took this as an impulsive wave. Just to make this more clear for you all, identified 1 and 2 zones. We had a reaction from the original zone. An entry was found, a partial for 7 RR, and then stop loss hit at entry. So some profits to be gained there. The price then traded up. We've tapped into the higher of the 2 zones I had identified. And what we see is we've had liquidity built, liquidity cleared, the fake out, move lower. And then what I said in the video I provided is that I want to see a tap of this zone and a reversal from it. We see that we literally would have been able to have found an entry from that. We would have partially at that low, so within 5-10 minutes there, we could have literally gained, what's this? Something crazy like 50 pips. Okay, so let's just look inside of here very quickly. Okay, this is quite nice. Liquidity built, liquidity cleared. We then had the break of structure to the downside. This move has also come to break this structure whilst also liquidating that. So, as long as price remains bearish right now from this region, I think we are looking at a longer term reversal with a lot of downside potential. I think, yeah, around 500 pips away. So, if we can find some entries in this region, I believe it will pay off for us very, very well. So obviously once we've had fundamental news like that released, the markets do go a little bit wild. So what I am going to have to wait for first is for this low to get broken and for some more structure to emerge first that is more tradable than this madness that has been delivered from the news. But it's very nice to see now that we've come back that the updates I was sending into VIP chat have pretty much worked out perfectly, where we've seen a clear reaction from that zone, which has come down to break structure and liquidate this level. So a lot of profit potential also from this market, where we had reversals from both zones now, an entry opportunity there. We also went through some buying opportunities that have been delivered whilst we're waiting for these setups to occur. But yeah, this break of structure should hopefully be quite relevant to us, with the fact that it is a pretty major zone tap, major zone reversal, a break of structure to the downside. So pretty much what I'm waiting for is I want to see this low broken first and some structure emerge that is a bit more tradable, that is a bit nicer to try and analyze and execute positions from. If not, obviously there is still going to be a clear buy to sell region here, which may act as a point of interest. We will move this alert actually, because that's already been hit down to that region. So one of these needs to get tapped before anything else happens. Can also bring this back in because it's already been tapped. Perfect. So yeah, that was quite a streamlined bit of analysis on the market. But you can see there's been a nice few trading opportunities there. So the bias is I'm just hoping to see a longer term reversal in the market here. You know, we see that after this correction wave was delivered and we started approaching this region, we see the market has curved off, and this overall area inside of this, which is hard to see given all the drawings that are on it, but you know, this alone is an overall distribution where we have liquidity built, liquidity cleared, that fake out delivered, and now we're getting ready to trade down and break structure. Obviously, working within this entire distribution, we have a smaller distribution which has reversed us exactly from that zone, where we've seen a proper break to the downside from that. Price is now traded as back up to test this buy to sell region. So if we see the reversal there, we are literally expecting price to trade from that point. Okay, so let's just say we got a zone tap from this, okay? We are literally looking at 616 pips away. So huge downside potential if price is definitely ready to reverse from there and create that the 1 day new impulse. Okay, I just won't want to trade the US 100. I just look at it for investment. It's a day trade. Yeah, I don't think it's nice to day trade either. I've looked at it many times and it doesn't respect, because it's not having as much liquidity pumped through actively day in, day out. As you say, a lot of the liquidity that is in that market is held within longer term investments. So it's always going to be a slightly different environment when it comes to trading that compared to something like a Forex market, which we know is actively traded second to second, day to day, so on and so forth. The zone is 9 to 12k USD. I'll check that out in a second. Cannot wait to reach our 1,000 sub target. Yes. Oh yes. Okay, so I'll have a quick browse at the Bitcoin. Yeah, it seems like I have the exact same region that I'm looking for as well in this market. As we go to the 3 month, I think it was I did this on, or maybe even the month, one of the two. This is pretty much like a clear sell to buy, and I think what a lot of people are forgetting is that even the huge markets like this, even crypto, is going to be controlled institutionally, and we know that at this point a lot of institutions have positions active. And they're still going to have this sell position active that represents a sell to buy. So a mitigation of this is going to be very likely. And this is going to be the real proving point of what's going to happen with the market, because I think it's more likely than it is unlikely for price to tap into this, reverse, and start then making a new bullish run. In which case, that could be a good time to invest or take positions in the market. But it all depends. Obviously, when price taps, we're still going to have to look for some form of entry confirmation and clear signs that price is reacting from that zone. But I know quite a few people now that have mentioned this sort of 9 to 12k region. I know Philip has as well. He's looking at around this region. So I think a lot of people have sort of got out of that state of mind, like, oh, it's going to the moon, there's not going to be any major pullbacks, and it's now a case of, okay, the hype's gone. It's just going to now react like every other financial market does. It's going to respect these laws that all markets pretty much respect. And it's not always just going to be a continuous up move. There's going to have to be corrections like there is everywhere. But yeah, it's very, very normal for this to happen. And this market has been following the smart money strategy quite nicely. You know, every single reversal has been clearly institutionalized. It's clearly a distribution or an accumulation. It's been respecting zone mitigations quite nicely. We see that obviously we know there's going to be a buy to sell, sorry, in that region. Price has literally reacted to that perfectly. Even if we went for the unrefined point and we took this overall region, we still reacted to that perfectly. The reaction of that zone as well, we see, has been quite a nice distribution. Liquidity built, liquidity cleared, a fake out delivered, and then eventually we get delivered with that break of structure down. Even on the lower timeframes, that would have provided us in there with entry confirmation. As we've traded lower, it's still just clearly reacting time and time again. Last buy to sell in this region. So even though people think this market is just going wild, it's going crazy, it's not respecting anything, it still is. And it always will remain to do so, in my opinion. Market, and this down here. So yeah, from now on, we are pretty much going to just be playing the waiting game on this market, especially. This is the main one I'm looking at, pound dollar and Australian dollar, US dollar. You know, I've got my alerts set on both of these for how I want to tackle them. So as of right now, it is quite simply a waiting game. So there's not a whole load we can do other than wait for those alerts to be pinged. But there is some nice potential there for long-term positions. As I stated, given that a potential reaction from this is going to sustain a move 600 plus pips lower. So definitely keep your eyes peeled on the market for any reversal potential and any potential opportunities we could find. Okay, we're in Q&A mode, so everybody make sure to get those questions through, because now is a brilliant opportunity to ask questions, you know, about the way we analyze, the way we trade, anything to do with LAGFX, anything to do with me as a person. Make sure to get those questions across, because now is a brilliant time to ask them. Also, thank you to everyone who has been tuning in. We have literally held at least 5 consecutive viewers at all points, which doesn't sound like a lot, but the fact that 5 people at least have stayed and watched this for an hour straight, we do appreciate it, because that is a lot of support, and it helps the analytics, it helps the algorithms get our channel out there much more, because we're really trying to provide as much educational content as we possibly can, because I feel like there is a lack of real YouTubers out there that are just trying to give free, solid information. They're not just trying to hard sell you something. They're not just trying to say, oh, make sure you use this strategy because it's mine, I've coined it. Like, no, I'm just teaching people what I've learned in hope that they can do things correctly, because this endeavor is a very, very difficult one, and it's very easy to be led astray or get on the wrong path. So our main aim here at LAGFX is just ensuring that that doesn't happen to people, because it's honestly a dark realm to fall into once you're on that bad path, and once you end up involved with a potential team that isn't actually looking out for your best interest. It's a downhill journey, and one within which leads to a lot of lost money, and that is the last thing you're getting involved with this to do. You know, a lot of people are here because they want to invest their money, they want to be smarter with their money. You know, they understand the fact that with inflation rising, just holding your money in the bank account it's not smart to do, because eventually that money's just going to lose value. Whereas instead, if you invest that somewhere, that investment is potentially going to increase further and further in value. So I think it's a responsibility of anyone who is in this avenue and wants to see themselves as a mentor or wants to provide education, is that I think ethically you've just got to do it correctly. There's a lot of free information that should be provided to ensure that even if somebody doesn't want to purchase your services, which is absolutely fine, it's not just a case of, oh, we don't care about that individual anymore, we'll let them go out, make those mistakes, fall down that wrong path. No, I believe it is our responsibility, regardless of whether that person wants to purchase our services or not, support us or not. They are still being given the right information to ensure that however they want to go about their journey, it is done so on the right path and done so correctly. But if there is not going to be any questions, I think we will wrap this up very soon. I've gone through pretty much all the analysis I wanted to go through. I've got all the alerts set, so it's now just a waiting game. Obviously, we're not going to sit here on this live stream for the next few hours until these alerts are pinged, because that would be very boring for you all, and I don't want to put you through that. But any final questions or any last requests, make sure to shoot them over. We'll give you a little bit longer on that. Okay, let's look at this. UJ has been nice recently, 100%. You two are the best around and open and out to help. I appreciate that very much, Ben. Would you ever consider doing day in the lives? We most definitely would, and it is something that is coming in the new year. So if that is something you want to see, like how we actually go about our daily lives with Forex, outside of Forex, make sure to stay subscribed and keep that notification bell on for the day that you finally see the notification of day in the life with LAGFX. But no, I'm definitely glad you think that, Ben, because that is pretty much just what we're trying to get out there. I think this industry just lacks individuals who are truly out there to help one another. Obviously, like, everybody has to look out for themselves to some degree, and when you're in business, you know, you have to try and be competitive and find an edge on your competitors. But at the end of the day, as I stated, like, it's so unethical and so unfair for you to actually get people involved with this realm and not teach them the right steps. Can you explain the VIP packages versus the courses? We most definitely can. Let's pull up a tab and head on over to LAGFX. Go on over to our services. I'll log in first, as long as it lets me instantly log in. Yeah. Okay. We should be good. Yes, we're in. Our services. So we'll go through this. So the VIP packages, so Luke's VIP chat, the VIP pass, so on and so forth. So what this is a representation of, our VIP chat is simply a Telegram channel within which myself, in this case, or Luke in this case, or both of us in this case, will provide daily analysis. So we'll give video updates, picture updates, explanations of markets every single day. Sort of like how I've done in this live stream where I went through and I back tested. When those things are actually happening in real time, we're just updating that into the VIP chats. We're basically explaining what our outlook is on the market for that coming day, which zones we are looking to take positions from, and if a tap happens onto those zones, we'll also discuss how we would look to enter from those zones. The idea being that if you're involved in this VIP chat, you are able to see exactly how we're tackling positions on a daily basis, and you can potentially look to take the same approach as us. Therefore, it gives you the opportunity to see what trades we are placing, and potentially, if you find those trades valid and it aligns with your analysis, you can place them yourselves, therefore seeing how you can follow along with any of our potential profitability. It's also a good place to learn. You know, there's a lot of exclusive videos that go into there, so educational content, and even just seeing people's analysis on a daily basis definitely helps you to grow. So basically this one just puts you into Luke's VIP chat, £25 per month build. This one puts you into just my VIP chat. This one here puts you into both, so which would be £50 with a slight discount. We can even give you a little insight into some of the stuff that is provided. You know, for example, for me, there's some videos here where we're running through analysis, running through the zones that we're entering from, positions we're potentially finding. Within these videos, I'm talking through a lot of concepts. I'm talking through a lot of ways we can get involved. You know, with Luke, again, a lot of analysis. He's actively identifying zones that he's getting involved from, and he's actively showing you how you can be profitable from the analysis that is sent out. So a lot of potential there from the VIP chat, if that's something you're interested in. If not, absolutely fine. We do also have the LAGFX Forex Learning Lounge, which is a free Telegram group chat, so I'd advise you get involved with that, because you don't have to pay a penny, and there's a lot of business updates, a lot of market updates involved in that, which can be very, very good. And then the courses, let's go on to that. So the courses are pretty much, it's like a mentorship program, except the fact that you don't get that constant one-on-one time. So there's a clear layout set with the PDFs, and the PDFs run through everything there is to know about our strategy. So the beginner's course runs through everything there is to know if you're a beginner into Forex. So what is Forex, risk management, trading psychology, market structure, trend lines, supply and demand, all of this stuff. The Beating the Banks goes through my smart money concepts approach to the market, in which case that three-step approach where it's market structure, smart money and points of interest, and then Wyckoff and entry confirmation. If we go into the client area, we go to the classroom and give you a quick insight into that. So another pointer, actually I completely forgot to talk about, free course. So this is a course that is completely free. You don't even have to pay for it. So another thing I definitely suggest you get onto. So you get an introduction to the course LAGFX, you get a little biography, autobiography about myself, about Luke, so you can learn a bit more about us. What is Forex? Runs through everything about Forex, runs through everything about risk management, trading psychology, how to create a trading account, how to get onto MetaTrader 4, how to get onto TradingView, all that stuff, pretty much just designed to set you up as a trader to start analyzing and practicing. And then getting onto what we were going to, the Beating the Banks course. If we look at this, 5 steps. So you have introduction, which just walks through the introduction, market structure, which is a huge PDF, 28 pages there, everything there is to know about market structure. Smart money, 22 pages there about smart money and points of interest. Wyckoff and entry confirmation. You've got 41 pages there about who is Wyckoff and how do we use his finding as entry confirmation. You then have a PDF about trading psychology, a PDF about risk management. So therefore, you just are pretty much set up with everything you need if you want to start implementing the smart money strategy. On top of this, if you go to our services and you click more information, takes you to more information, you'll see as well with the Beating the Banks course, you're also entitled to some Zoom sessions throughout. You also receive discount to pricing to the VIP chats. And there is quite a lot of additional benefits you gain if you purchase the course. You also gain a badge on the website, so everybody knows in the forums if you have purchased that, and they know, okay, he's purchased this course, he's obviously going to be quite knowledgeable within the smart money approach. So yeah, if you're interested in any of that, just lagfx.co.uk. You can obviously read up about that yourself, decide if that's something for you. I would definitely suggest though that what you do is, if you go to client area, classroom, and then make sure everybody in here right now takes advantage of this free course, because it is very, very, very good. A lot of information there, completely free. And also if you look in the description of this live session, you will see a link to the free Learning Lounge group chat. So yeah, that's enough of that. Just make sure you take advantage. Is there any more questions anybody has about this? Hopefully that has answered your question there about the VIP packages and courses. If not, make sure to just ask any questions and I can go through that again. Also, the music has ended. I just realised that. Apologies. We're in awkward silence. Maybe we can even mix it up a little bit. But I have a quick question for everybody in here. How has your trading week been? Is what I want to ask. Have people been profitable? You know, how the market's been this week for you? I would say this has been quite a good week in terms of how structure's been playing. I believe this week there's a lot of longer term positions that are lining up, which is always a great week, because that means that if we can find those positions, this 1 week of trading alone can sustain months worth of profits. Kyoto, definitely going to look to buy the Beating the Banks course. Appreciate that very much. Just make sure you read through everything first, just to double check that it is definitely for you. Obviously just go into that more information tab, just read through, make sure you understand it all, and of course any questions about it, make sure to let us know. Got the free course already, really helped. Perfect. Because we spent a long time trying to create that, but we felt like it was needed. You know, going back to the rant I was going on before, you know, if somebody is getting involved in Forex through LAGFX, we want to make sure that the second they do anything, they are provided with at least the basic core information that they need to go out into that realm. And that is what the free course is there to do. You know, it tells you exactly what is Forex so that you are educated about it properly. Risk management, which is so important, it's so huge to safeguard your equity. And then trading psychology, because that is a huge factor that most people don't even believe exists until you start trading and then you're like, oh my god, this is a psychological game. Yes, so you need to really learn how to take control of that too. Thanks, been trading for 2 years, just need to work on entries. I am always on the right side of the market. Yes, that is definitely a big hurdle, I must admit, something that I struggled with a lot at one point in my trading career. It's like, you learn a strategy, you start getting really good at analysing, you notice that your analysis is playing out often and often and often again. And you're like, great, I'm a great trader now, you know, I've learned what I need to learn. And then you suddenly realise, well, actually finding those entries on a regular basis and not allowing your emotions to take too much control is tough. So I'd be more than happy to talk with you further about that. Potentially, even if you go onto the website, you can actually book consultation calls, which is literally, you can get 15 to 30 minutes of our time completely free, and then we can talk you through, potentially we can look through, see what it is that's making you struggle with that, And then from there, we can potentially lay out a plan on how we can look to tackle that, see what the limiting factors are between the analysis and finding that entry, because there's obviously something that is limiting. If you know that you're great at analysis and you know that your analysis is playing out, there is no reason why you shouldn't be profitable. Therefore, if you are struggling with the entries, there's obviously something in between that's going on there that is acting as a limiting factor. We need to try and find out what that limiting factor is, try and remove that. If I had to guess, and something that I've noticed within, I'd probably say 90% of people, the limiting factor is something to do psychologically. So I would potentially start looking into learning more about psychology. I'd recommend books and podcasts from Robert Greene and Jordan Peterson. Good for my Excel sheet. Been watching the market, like just not been placing, waiting for the best, confirm my trades. They only have 2 trades left, but I've accepted I've failed in the second part. I bought an MFF challenge ready for the new year. Yes. Yeah, it's definitely like, it's not a bad thing to do. And I think too many people get caught up in, right, I've learned how to trade, so now at this point, I just need to start placing trades. I need the profitability to come. Like, no, the second you've learned how to trade and you're good at that, that is a skill for life. You don't need to be profitable that week, that month, because decades down the line, once you've really proven you are profitable, the profit potential there is endless. So spend as much time as you can learning and refining first, because there really is no rush. Would love to see a day in a life 1,000 sub special, maybe. I'm sure that could be arranged. We do have some things planned and in the works already, although it might actually end up being in the new year. So let's say we hit the 1K. In the next few weeks, it probably won't be until mid to end January when the special video comes out. But nonetheless, I think it will be enjoyable. Very confident now. That's perfect, because it means that your psychology is not going to be a limiting factor, which is exactly what you need. Forex is a skill we have lifelong. We should take our time for it, most definitely. And I think that's something that a lot of people struggle to do, is just remembering the bigger picture, you know, sort of zooming out and just remembering that we're in this for the long haul. It's exciting though, Ben, because I think we originally started speaking the very start of this year, so it's pretty much going to be coming up to about a year, right, Ben, since we first sort of spoke, since all the first things happened, since we got in calls, whatever it is that went down. So to see how far you've come within the year, and to believe that start of next year you're actually going to be getting funded, it is great to see. Looking at this market though, as we've been waffling away, we are having another move back up, so I definitely need to see a reaction from this zone just to confirm the price is wanting to move lower longer term, that supply is in control. Because when we have news come out which causes the market to do something quite crazy, I always wait a while for more structure to be delivered to reconfirm what's going on, because fundamental news has the ability to shift the market's outlook and bias quite heavily. So I just need reconfirmation that the market is doing what I want it to do. March was the first time I spoke to you, Luke. I think it was before that, Ben, trust me. I remember. I'm sure I was looking back, I think. I could be wrong. I could definitely be wrong. And I feel like I remember it being about February time. Jeez, I'm trying to scroll back in our chat and it's hefty. That's what it is. You can probably hear the scroll wheel going crazy. I mean, it could have been then. For some reason, I had it in my mind that it was all the way back in February. Yeah, so the very first image that we sent to each other was back in February. Wow, if you go into our chat and go to the pictures, you can see some of the analysis we had sent to each other. You can look back at some of your old analysis, see how far it's come. Yeah, that's a crazy thing, and something actually I would recommend for everyone here is keep tabs of your analysis. Like, I'm very lucky in the fact that I've been posting my analysis since I started trading years ago, in a group chat with a few other people, even things I'd sent to Luke, now things sent in the VIP chat, sent to other people. It's so nice every now and then to look back at analysis from years ago, months ago, weeks ago, just to see how far you are coming. So I definitely recommend to anyone watching this right now, make sure that you keep tabs on your analysis. You know, maybe just keep a folder, and every now and then just add some analysis to that folder. You know, do a thorough piece of analysis, add it to that folder. Maybe you share some of your analysis on Reddit, on LinkedIn, on Instagram, wherever it may be. You know, just keep a tab of that analysis so you can actually look back. And in times where you feel like you're not doing good enough, or you know, you're letting your mind get the better of you, and the profitability that you believe you should be getting doesn't seem to be appearing or arriving, you know, just take a look back. How was my analysis a year ago? And you'll see the progression, and you remind yourself that you have progressed so far, and not to kick yourself at the fact that you're not where you want to be right now. That's fine, because the only comparison you should be making is you compared to the past year. You know, you to how you were yesterday. How are you compared to you yesterday? How are you compared to you 1 year ago? And as long as we can say that there is an upwards trajectory there, that's amazing. But yeah, I guess I will say once again, unless there's any final questions or any final markets people want to have a quick look at, we will look at rounding this up. Brilliant advice. I've been sending Luke analysis since I started, and it's definitely coming along. Yes, it's good as well, because you can always go into the chats on Telegram and literally scroll through all of the months, years, and literally just see. Oh my, I sent you the first time I learned about Wyckoff on NZD USD. Crazy, yeah. I can remember those. I remember those times. It's crazy, absolutely crazy, yeah. And that's a good thing, is, you know, when you look back at stuff like that, it really does show you how far you're coming. Screenshot. Okay, which one have you linked me to? Yes. When was this? March the 28th. Wow. Yeah. It's mad. Going back through the times. You know, I'm going to expose myself here and try and find some analysis from myself from a very, very long time ago. God. Let's scroll all the way back to years ago. I mean, this will probably be like 2019, 2020, I think 2020. Let's see. Okay, let me find some. Wow. How can I get this across? Just have a look. That right there. And that was posted February the 9th, 2021, back when I wasn't even trading the smart money approach. We can see that right there I'm using loads of what they called indicators. I'm using simple trend lines, support, resistance. Wow, that really shows how far you can come in a small space of time. That is literally, what, 18 months ago? No, a bit longer, sorry, nearly just shy of 2 years ago, actually. So, yeah, that is how far you can come. Well, sorry, regardless. I know, it's crazy. You don't want to see the rest, Ben. Trust me, you really don't want to see the rest, because, ooh, it literally looks as if, you know, when you give a child a bit of paper and a pen, and they just draw random lines, squiggly lines, boxes, all over this piece of paper. That's what my charts used to look like 2 years ago. I'm sure I used to just put lines and trend lines on for the fun of it, even if they held no relevance. I'm pretty sure I used to just throw them on there to make it seem more complex. to make myself feel better. So yeah, don't worry. As I say, look back at things like that and you can see how far you have come since then. You know, my understandings of the markets there was so minimal, and I was so naive in believing that I didn't really need to know that much. I thought, wow, I can draw a few lines on a chart, I'm going to make millions. But you very quickly realise that is not the case. And I think it is the misconceptions that make it such a fun battle, because it's sort of like, and I see many images of this on Instagram and many posts that people make, and you know, it's like you're climbing this hill, and at first it looks like a very easy climb, and then you hit the ridge and you realise you've got another hill to climb, and so on and so forth, and you're constantly climbing this hill and you constantly believe that you're at the top, and then the second you reach what you believe the top, you then see an even bigger wall to climb. And it's like, that's exactly what it is. You're so naive at first and you think it's going to be so easy to reach the top, to overcome the hurdles. The second you do, the second you learn more, you realise the less you know, you realise the more there is to learn, and that is just forever, what am I trying to say, never ending. So even now, I would say there's still many things I could go down, there's still many additional things I could try to learn, but I've found a nice niche of information that I can implement on a daily basis that works for me. But it's just many more years of continuing to apply this, compound, so on and so forth. But yes, enough waffling. Thank you to everybody here who has stayed, who has watched this whole time. Very, very much appreciated. Hopefully you've enjoyed the analysis we did at the start. Obviously it's been a bit more of a chit chat towards the end. I'll give you a couple minutes to get any final questions in there before I go. And also, if you liked the live stream, make sure to let us know that as well, because we can bring those back more regularly. Yes, come a long way. Most definitely. Okay, it seems like everyone is pretty satisfied there, so we'll call that a day. Again, thank you to everybody who tuned in, and yeah, I will see you all soon. See you later, Ben, Kyoto, everyone else that's still in here. It's been a pleasure.